All right, got a lot to talk to you about today. April's numbers are out. CPI report came out today. Some interesting trends on the national as a country in the real estate market. Um, but let's dive into what happened in King County in April, and we're going to talk about single family homes only. If you guys want, you know, information on your specific area, please reach out. But I'm going to just focus on a kind of higher level here. Okay, so we're going to start out with months of supply. So, and what that means is how many months would it take to sell all of the available inventory that's on the market right now, given demand? And before I go into the numbers, what you need to know is a seller's market is anything less than 3 months. A balanced market is anything between 4 and 5 months. A buyer's market is anything 5 or higher, right? So that's key to know. So in April this year, we had 1.2 months of inventory. How does that compare to last year? Well, in April last year, we had 0.6 months of inventory. So big jump going from 0.6 to 1.2, right? That's nearly double. But we're going from all-time lows, right? So, and at 1.2 months, we're still so short from being in a balanced state. We need 4 to 5 months. So again, we're just dealing with this low supply type of environment. So what's going on with prices? Year-over-year prices are still down about 12%, but year to date, January 2023 to April 2023, prices are up 9.3%. So month over month, prices just continue to trend up. Median days to sell. So how long it takes a home once it's listed to go under contract. In April this year, it was 6 days. How does that compare to last year? 5 days. So not much of a change. But what's interesting is if you look at year to date, January to April, we started the year at 34 days as the median days on market, and we have gone from 34 to 6 days. And partly is because that demand is still very resilient, very strong. And what happened was agents kind of started off the year like, I don't know what's going on in the market, what people are thinking, so we're not going to have a review date. Well, as the year went on, it was like, oh my gosh, there's all these people showing up to the house, multiple offers. We need to add their offer review date back in. And I think that's why we're seeing the days on market shrink back down to about a week. Sales price ratio. So back in April, we were just getting off of the peak, right? Back in March. And the sales price ratio back in April in 2022 was 111%, meaning a house came on the market at this and it sold for this, and that difference was about 11%. In April this year, it was 2%, as in properties were selling for this and sold for 2% more. So properties are on the median selling for more than what they're asking for. Month to month, we went from 98% or so in January to 102% in April. So obviously, the competitive environment just kind of has been heating up over the course of the year. But yes, we're down compared to, the very peak of the housing market back last year. So in sum, I think, it's a seller's market just based off of the amount of inventory that's out there. It's getting more and more competitive. I'll share a story with you. I just got under contract a couple weeks ago on a house in South King County, and there were 6 pre-inspections done on this listing. 6. So those are 6 buyers that rolled the dice and said, we're going to pay for this inspection so we don't have an inspection contingency in our offer. And we don't know if we're going to get the deal, but we're going to spend the money anyways. 6 pre-inspections on a house in South King County. We ended up getting the deal, and we ended up having to pay, a lot more than what it was listed for. But that's just what you got to do. Okay, so on the national stage, inventory last week actually fell. And Mike Simonson was quite surprised, but he thinks that he could even see inventory year over year be negative as of July this year, which will be really interesting to see if that's the case. I think a lot of that is because there's a lot of people that don't really feel incentivized to sell because they're locked in between 3 and 4%, right? 26% less new listing inventory last week versus the same week a year prior. The good news is pending sales grew with supply, which is good. Underlying demand is strong. No sign in a surge of inventory from distressed sellers or investors. Median prices continue to creep up, and median pending prices ticked up, but remain 2.2% lower than last year. So in some, we're seeing the available inventory sort of just not pick up like it typically does this time of year, and that is constraining supply even more, which is putting more pressure, upward pressure, I'd say, on prices, right? Because you have the demand out there, and it's obvious there's the demand out there for the available inventory. And if we have that new listing inventory and just total inventory declining throughout the year, there's less options for buyers, and that's just going to create these competitive environments. So macroeconomic news. So CPI came out this morning, and I don't think people were all that surprised to see that the growth rate of inflation is, less, which is good. The rent growth is definitely down, but at the end of the day, inflation is still high compared to what the Fed wants, and I think this is why we didn't see huge swings in the 10-year, which would mean huge swings in mortgage rates. We're still sort of hovering around that 6.5%. Things went down a little bit after the news, but we're zigzagging around 6.5%. But it's good to see that inflation is cooling. Whether or not the Fed will take this and decide to go another 25 basis points or not, nobody knows. But they definitely are going to look at this and go, it's still higher than what we want. So we'll see. And maybe the credit tightening that people talk about will help. But in the Fed Fund meeting prior to this last one, they said that maybe we won't have to increase the Fed Fund rate because of the credit tightening, and then they came out and said, that really hasn't done much, and then they went up another 25 basis points. So who knows? But I think for you, it's just important that you realize that we may see in May's numbers that comes out in June, and June's numbers that come out in July. Those numbers may come in a little bit better which would mean maybe we get a break on interest rates. But, you know, I think the consensus here is that we're just going to continue kind of zigzag around 6.5%. What is interesting, though, is that after the Fed's meeting came out, we saw mortgage applications increase 6.3%. And what's really funny is Skylar Olson, who's the chief economist at Zillow, they track page views, and they see when interest rates make, like a 20 basis points decline, page views all of a sudden just go through the roof on Zillow. And I think people are really, really sensitive to these slight changes because they're trying to reduce, their costs and make things more affordable. But anyway, that is the update for this week. If you have any questions, reach out.